In this video, I'm going to show you the institutional levels. So what do I mean by that? Well, basically, there's institutional price levels. So retail teaches you one thing and institutional levels are another. So you may or may not know this, but to build upon it, I'm going to show you the institutional prices. So our first institutional price, starting from the top, is 800. Our second price is 500. Our next price level is 200. And then our last price level is the round number of price. Okay, so let's just dive straight into this. I'm not going to beat around the bush. So let's just mark up our institutional price levels right here. So we can see that price currently is trading at 1.11500 right there. So that is an institutional level of 500. 11500. And if we add another price level, we can then add the one underneath that, which is 11200 right there, just like that. And we can keep doing this. So if we go and we add the next price below that, which is 10800, and so on and so forth, we add our next price level of 10500, and again our next price level 10200, and we can continuously do this over and over again and there's our 800 level. So as you can see that these are the institutional levels. So we've got our 500 at the top here, then our 800, and then our 200 right over here. We also have what I said is called the round number price. So basically the round number price would be a price that is exactly on the zero level. So if we look at that, we would say that 1.11 is the round number price right there. So these are your institutional levels, the 500, the 800, and the 200, as well as the round number price. And if you pay attention to the chart here, so let's just start on the side over here. Price basically came up into our 1.09800 level and rejected the 1.0200 level. Price then continued down. And where did it continue down to? So if we look over here and we round it off, this is our 800 level of price right there. Price bounced off of an 800 level. So here is an 800 level. We continue to follow price, and you can see that there was large amount of reaction off this zone. So if we mark up the area of price, we will see that this also is an 800 price level right there like that. And if we follow price, you will see that here is a 200 level. So that is our 200 level. So price rallied up, rejected the price of 10200, rejected the price of 0.9800. Price then came down, tried to rally back up, continued downwards, and bounced off of our 800 level. It then traded between the 800 level and the other 800 level below on the 7 figure, and that is our 8 figure, and here is our 200 figure. So if we continue to follow price up, you'll see that it rallied up, and if we just mark up here is our 200 price level. So that is our 200 price level. Price rallied up and we left out our 500 level. So that is our 500 level. So here we have our 800 level, our 200 level, and we missed one here, our 500 level. So that is our 500 level. They're very easy to mark up on your chart, and you can just follow the price levels as price moves. You don't need to add all of these prices, but for the purpose of this video, you can see that price intersects on these levels. So I'm just going to add the relevant numbers to the relevant lines so that you can see how price interacts. And we missed our round number at the bottom here, which is exactly 8. And here is our round number in price. And here is, we missed another 800 level right here. So as you can see, price reacts on these institutional levels, the 800, the 500, the 200, and the round number price. So if you continue, you will see that price intersects, either rejects or rallies off these price levels if you follow them. And you can see it keeps happening as the trend goes up. You'll see that it rejects or rallies on these price levels. And you can go ahead and do this on your phone, or you can do it on your MetaTrader, and you'll see the same results. This specific pair is Euro USD, but this can be applied to any price on any pair, and you always mark up the 500, the 800, the 200, or the round number, depending on what price is currently trading at. So for the purpose of this video, I'm just going to clear up this chart and show you the institutional levels that EU is currently trading on. And you can see the reactions of these zones. So we're going to add up our 200 level here. Oh, sorry, made a mistake on that one. 200. And then, of course, we have our round number figure about there. And if you use what I've showed you in the previous video, these order blocks intersect with these institutional prices. So there is our first order block on the 4 hour, and here is our second order block on the 4 hour. And you can see how price is interacting with our institutional levels, our round number, 200 level, 500 level. Price has not yet gone to the 800 level, but if it has gone to the 800 level, we should expect to see some reaction off that zone. And you can see that when this order block was created, this one over here, we can say that this is our round number that price rallied from. Here is a bullish order block right there. And you can see the large move upwards from this round number institutional level. It then rallied up past our other round number, past our 200 level, and rejected the 500 level, then retraced down to our round number, rallied back up into our 500 level, and price has been maintained between the 500 institutional level and our round number institutional level. So this is EU, and you can go ahead and do this on your phone or your MetaTrader on your PC and see how price intersects where order blocks have been created. So I'm just going to do this on another pair just to show you that it does work. So as we can see here, this is GU, GBP USD, and it is currently sitting on a round number figure. And if we go ahead and we looked at some more price data at the bottom where price rallied up from, we can see that this 800 level was respected and price rallied up from. Again, we see some rejection over here in this area. So if we look, that is an 800 level. And you can see price then rally down into this level, which we could say is our 800 level. Price then rallied up. Where did it rally to? Into our 500 institutional level. Price then traded sideways and rallied up and into our round number. We can also see here that there is some reaction of our 800 level. So there is our 800 level. And we can go ahead and mark them all up to our 200. And you can see that price not only bounces around here on these areas, but also on the way down. Price rallied up from our 800 institutional level, rallied into our 24,200 institutional level, then retraced back down into our 800 level, back into our other 800 level, past our 800 level, back almost into our 500 level, and then price basically shot down. Some reaction off our 800 level over here, back up briefly, and if we just see here that this price here is also an institutional level. Shot back down back up, some rejection into the 200 level. Price then went back up into our 800 level. A little bit of reaction here off of our 200. Some more reaction off our 800. Back up past our 200, past our 800 and into our 500 level. Then retraced slightly back down past our 800 into our 200 level, and then price rallied up past our 800 level, consolidated a bit of our 500 level, a little bit of consolidation here at the 800 level, and basically a blast off here into our next round number. So you can see that price intersects with these institutional levels. So here you can see that an order block was created inside this institutional level right here. And the same can be said over here. An order block was created inside this institutional level. Order blocks will form mostly at these institutional levels. Why? Well, because these are institutional concepts that I'm showing you, and this is the reaction that we get when price meets these institutional levels. There is another order block, basically inside our institutional level of 500 and our institutional level of 800. And another order block has been created right over there. And you can see the reaction from the 200 level past our 800 level and down into our 800 level. And you can see order block created, another order block created over here. So order blocks and institutional levels go well together. As we can see, price makes order blocks regularly at institutional levels. And here we can see that that is a bullish order block on our 800 institutional level. And again, another order block at our institutional level. Price then rallied up, retraced a bit, bounced off of our order block, off of our 200 level, and rallied up. So you can see over here that there was another order block, both a bearish order block. This over here is a bearish order block, but you can see that was a bullish order block next to it. So sometimes that will happen where a bearish and a bullish order block intersect, and then you would have to just wait for more price data to confirm what that means to you. So you can see there, this was a reaction of the 500 level into our 800 level and another order block at our institutional level between 200 and 800. And here we can see after this rally up, there is some reaction off of our round number. So we could see further reaction as price continues up into our 200 level right here. And so on and so forth. We would then just add our 500 level. And we could expect further reaction off these institutional levels. So this was GU. Let's just take a look at Euro NZD and see. So here is the top of our chart, and we could see that the institutional level over here is about 500, which is our 500 institutional level. And the reaction of this zone over here, we can say that this is our round number. So there's our round number. And if we look at the bottom here, we can say that this is our round number. Some more reaction of this zone over here, and we can say that that is our 800 price level. Right there. So we got some reaction of here, our institutional level, our round number. More reaction at this zone over here. This is our 500 round number. And over here at the bottom, this is our perfect round number. And you can see that not only are order blocks created, we also have them at institutional levels, our 800 level. Here is a bullish order block. If we look closer, this is an 800 level right over here. So when price rallied up, we had some rejection over here. So let's look what price came to over here. And we can see that this was a 200 price level. We had some rejection. Price rallied up. Where did it rally up into? Right about here, which is our 800 price level. Notice how an order block was also created. Over here, we can have further order blocks created. So this here was an order block. It took 2 candles to create this order block, but it is still an order block nonetheless. So price rallied up, some rejection at this 200 institutional level, an order block, a bullish order block was created, price rallied up past our 800 level, retraced a bit from this 800 level, back down into our 800 level, and another order block was created on our 800 price level right here, took price past all these other institutional levels into our 500 institutional level, and we can see an order block was created right here. Price moved down, continued down. Where did it continue down into? So we just see here is our round number over here. $900, sorry about that. That is our round number, 79 round number. And we can see more intersection over here. Price rallied up into our institutional price level. Another order block was created between our institutional price levels. Price then came down and bounced off of our 200 price level. And what did it do? On the 4 hour, created another order block right there. And if you look at this low over here, we can see that this order block, both bearish order block, which actually became a breaker, but that will be discussed in another video. This bullish order block here is sitting at an institutional price level. So you can see that is an institutional price level, the 200 institutional price level right there, exactly off the 200 price level. Price bounced, shot right up past all of these other institutional price levels, but you will see reaction of institutional price levels. You will see order blocks mostly created around institutional price levels. So let's just take another look. This is AJ, AUD, JPY. And we know that price intersects at our institutional price. So currently, right now, we are trading around our 200 price level. Below that, we will have our round number. And below that, we will have our 800 price level. There's our 800, our round number, and our 200. You can see that when price touched that level, it rejected, but continued upwards. So if we look at the reaction in this zone over here, we will notice that price was intersecting with our 800 institutional price level, and it was consolidating inside our round number institutional price level. You can see even here that when price intersected with our institutional price level of our round number, price then rejected but continued upwards anyway. So here is an order block created right like that, and another order block created over there. And if we can see that over here is an order block inside of the trend. So this here is an order block, and if we put our price over here, we will see that this is a round number. So not only do we have an order block, a bullish order block continuing the trend into this institutional round number figure, price then creating bearish order blocks, bouncing off of this bullish order block, off of our round number, continuing upwards past our round number, then intersecting with our 800 number. So let me just add actually the 500 level here. So you'll see more price data interaction. So as you can see, price intersects there and bounces off these levels consistently, all day, every day, on all pairs. So you can see price intersecting with our institutional price levels, all day, every day. Here we can see more order blocks being created. Here is an order block, and here is an order block. When price moves down, where is price moving to? An institutional price level. Not only do we have our breaker over here, also have an institutional price level. Where did price rally off? Our institutional price level. So you can see this happens daily, every day, all pairs. Price intersects, order blocks get created at these price levels. Again, we see an order block created, another order block inside the other order block at our institutional price levels. And you can go and do this, like I say, on your phone, on your PC. If you have a crosshair, you can easily see how price intersects at these levels, how order blocks are created at these institutional price levels. Knowing this is an important part of using price action to determine trades, and is one of the foundations of trading institutional concepts, knowing these price levels. Now, you don't have to, once you've learned these price levels, mark them up on your chart like I have here, but for the purpose of educating all the individuals that watch these videos, I've added them so that you can see how price interacts on these levels. So to recap, we have the institutional levels, and these institutional levels consist of the 800, the 500, and the 200. We also then have our round number, which is basically 71,000, 70,000, 73,000. Those are our round numbers. They are also important. So we only have 4 institutional levels, and you yourself can go and see that we have reactions off these zones, these levels. They are important levels, and you don't have to have them on your chart, otherwise things can get messy. But knowing that they exist and where price can potentially react from is an important factor into deciding or confirming trade setup. Thanks for watching, and I hope this has taught you something that you didn't know. Please like, subscribe, or comment on the video, and I'll see you in the next one.